Ladies and gentlemen, good day and welcome to the Q1 FY25 earnings conference call of Yasho Industries Limited, organized by Orient Capital. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this call is being recorded. I now hand the conference over to Ms. Masum Rataria from Orient Capital. Thank you, and over to you.
Thank you. Good evening, everyone. Thanks for connecting to Yasho Industries Q1 FY25 business con call. Today, we have with us from the management, Mr. Parag Chaveri, Managing Director and CEO, Mr. Yasho Chaveri, Full-Time Director, and Mr. Deepak Kaku, the CFO. Before we proceed with the call, I would like to give a small disclaimer that the conference call may contain forward-looking statements which are based on the beliefs, opinions, and expectations of the company and so on today. A detailed disclaimer has been given in the company's investor presentation. I hope everyone had a chance to go through it, which was uploaded on the stock exchange yesterday. I would like now to hand over the call to Mr. Parag Chaveri. Over to you, sir.
Good afternoon, ladies and gentlemen. On behalf of Yasho Industries Limited, I extend a warm welcome to all of you joining us for today's results call. We greatly value your time and interest in our company's performance. I trust you have had a chance to review the financial results and investor presentation for Q1 FY25, which are available on stock exchange and on our company's website. I am pleased to announce the successful completion and commissioning of our Pakhajan facility on April 9, 2024. This facility is spread over 42 acres with an initial installed capacity of 20,000 metric ton per annum. With this facility, our total capacity now stands at 32,500 metric ton. As we had earlier mentioned, we expect our customer approval to be obtained in next few months and expect to utilize more than 90% capacity in FY26. With the start of this facility, we are confident that the next phase of expansion and growth of our company is ahead of us, and we are confident that our efforts will generate wealth for our investors. We have also opened a subsidiary in the USA, which will be operational in a few months' time to expand our sales network in the region. Talking about the financial highlights for the Q1 FY25, our consolidated revenue from operations reached at INR rupees 172.87 crores, reflecting a 15% year-on-year growth. We achieved a notable volume growth of approximately 27% year-on-year. Despite current shipping issues, we have grown our export volumes. Export contributed 61% of our revenue. Our EBITDA margins were constrained due to the underutilization of the Pakhajan facility. Currently, utilization of the facility is about 10%. In Q2, we are expecting 20%, after which we expect it to increase substantially in Q3 and Q4. We expect the EBITDA margin will stabilize back to the previous level by Q3, Q4 of this year, which we expect it to grow further. It may also be noted that profit before tax margins were also impacted due to the depreciation and finance costs related to the new facility, which we had expected. We understand that the current debt level has peaked, and we do not intend to increase it any further. We expect that the debt to EBITDA will be close to 3 by end of this financial year. In conclusion, we are confident in our organization's promising trajectory and the future prospect. We are committed to increasing our shareholder value in the long term. We appreciate the trust that our investors have in us and the dedication of Yasho team, which drives our growth. We may now proceed to any questions you may have.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use headsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Tushar from Kamakyu Wealth Management. Please go ahead.
Yeah, good afternoon, sir, and thank you for the opportunity. So my first question would be, what was the reason of negative PAT this quarter?
Sorry, can you just go slow?
Yeah. I just wanted to know what was the reason for the negative PAT this quarter, profits.
As I said, that we have commercialized the new plant, and their depreciation and the interest cost was a major reason to have the negative impact on the PAT.
Fair enough, sir. And so in your new CapEx, which were commercialized, just wanted to know, guided initially EBITDA of maybe 20-22%. Do you hold that? Also, you are guided for company level 19 to 20% EBITDA margin. Do you hold that guidance, sir?
Absolutely.
With 50% utilization for this current financial year.
Yes.
Fair enough, sir. So in terms of your product realization, how do you see the environment panning out?
Well, there is a current pressure on the selling price, and so does also the raw material prices are also under pressure. Number two, there is some kind of a delay happening into the in an export, getting container available and all that thing. So we believe that should be over by end of Q3, and early Q4 things should start stabilizing. But we can't say due to the geopolitical situation what's going on currently. 100% nobody can say what's going to happen.
Sir, just wanted to know, like the guidance for 50% utilization is on the back of soft order booking?
Yes, sir.
Fair enough. So I get back in the queue. Thank you.
Thank you.
Thank you. Our next question is from the line of Manan Shah from Moneybee Investment Advisors. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. I wanted to know with how many customers are we doing the trials currently, and whether these are domestic or international customers, and whether they are our existing customers or these are new customers with whom we are doing the trials.
Well, we are working with number of customers in an export and also into the domestic field. Couple of them are new customers who we have identified in past, who could be on our roll call, and a couple of them are already existing, but we can expand the line with them with the new capacity available.
Okay. And when do you think will we commence with the next phase of expansion that we have at Pakhajan?
I think I said in past also that till the time we don't achieve 70% utilization, we don't really work on next phase of expansion. We hope that we will be able to achieve by end of this year or the last quarter of FY25, and then we'll talk about it.
Understood. And as you scale up the utilization at Pakhajan, do you anticipate you guys will need any more working capital debt, or you will be able to manage with the current debt levels that we have?
I think we'll be able to manage with the current debt level. We don't expect too much requirement. Purely because of the sales, the selling prices drop and also the buying raw material cost has dropped. So the overall projection is not something like which is not can be managed within current thing. And also we will have some positive cash flow generated during this year, so that will help us.
Sure. Thanks. I'll get back in the queue.
Thank you.
Thank you. Our next question is from the line of Aman from Solidarity Investment Manager. Please go ahead.
Hello. Am I audible, sir?
Yes.
Yes, sir.
Thank you for the opportunity, sir. Sir, I have a bookkeeping question. Sir, if we annualize the Q1 FY25 interest cost of 14 crores and divide it by the FY24 borrowings, it implies sort of a 10% interest rate versus 8.75 that you communicated in the last quarter. So am I missing something in my calculation?
No.
So for us, the interest rate, is it 10% or is it 8.75% that we should work with?
It should be 8.75%, 8.75 to 9% with the bank.
Sir, but it comes out to be 10% if I annualize the Q1 FY25 interest cost.
No, I don't think so, sir. No, it is not the case. I can send you the total working of the interest cost if required.
Okay, yeah, that would be great. So my second question is, sir, what is going to be the cash outflow on account of interest payment and principal repayment in FY25 and 26 respectively?
FY25, there is no repayment for the term loan. The term loan will start only from April 25.
Okay. And so what would be the repayment in FY26?
That FY26 will be something about 45 to 50 crore.
Okay. And so my third question is, I just wanted to understand the operating leverage better in the Pakhajan plant. So, sir, if we assume the current level of capacity utilization, sir, what will be the fixed cost, that is employee cost plus other expenses on a 12-month basis? And if, let's say, the capacity ramps up to 50%, in that case, what would be the fixed cost?
Well, fixed cost is fixed cost. It's not going to change with what capacity I'm doing it. There will be a constant fixed cost. I can work it out and you can send me the mail. We can get with all the details on that.
Okay, sir. So those were my questions. I'll get back in the queue.
Right here. Thank you.
Thank you. Our next question is from the line of Rohan Patel from Turtle Capital. Please go ahead.
Hello, am I audible, sir?
Yes.
Yeah. I'm new to this company, but I just wanted to understand the capex that you have done, the additional, that's to the tune of 461 crore. So what kind of asset turns are you targeting at optimum utilization of that asset?
Well, our optimum utilization with this 20,000 metric ton, we should get a revenue of about 550 crore plus minus something.
550 crore plus, kind of.
Yeah. Plus minus, maybe 5% here and there.
Got it. And what would be the margin profile of that asset? Like what kind of EBITDA margin?
Yeah, from a new, at a company level, between it should be 19 to 20% EBITDA.
Okay, between 19. And so currently it's operating at this quarter, like at 10%. And what are you expecting the capacity utilization by year end?
Well, at your end, we should have a utilization at the new facility about 45 to 50%. And the Vati should optimum run at a full capacity, almost 90% capacity.
Okay. So by the next year, we can expect that both of the capacities will be operating at optimum level.
Yes, for FY26, we are expecting to both the company should run with almost a 90+% capacity utilization.
90+ capacity. And when we do that 90%, we will be at a
FY26
level. In FY26, we can expect revenue to the tune of 400 to 500 crore from new capacity.
We are expecting a revenue between 1,200 to 1,300 crore in FY26 because of selling price.
Okay, that was from my side. Thank you.
Thank you.
Thank you. Our next question is from the line of Abhishek, an individual investor. Please go ahead.
Hi, sir. Just wanted to understand one thing. Our revenue is up by around 15% year-on-year for Q1 FY25. So, could you provide me more insights into the main drivers behind this growth? Specifically, how did the increase in export volumes contribute to this performance?
Well, in export, we have grown in volume, but the drop in number, the selling price. Okay, so that's why you can see the slight drop in an export percentage from 63 to 61%. The volume term, we have a healthy growth of almost about 27% definitely. That has also been contributed from a new facility, but some productivity come from that too.
Okay. And about EBITDA and PAT margins, they are significantly affected by increase in depreciation and higher employee expenses. So can you elaborate on the extent of this impacts and any strategies that you are planning to manage?
This was well anticipated by us that the Q1 will have an impact and may not have a positive earning by the company purely due to the capitalization of the new facility, what was about 488 crores or something they capitalized, and that the interest on that, the depreciation, and also the plant operation cost will be impacted when the plant is running at 10% capacity and a lot of steel trials and the stabilization going on. The cost is quite high. So those are the factors majorly impacted on our profitability. Also, there was another small impact came from our Europe subsidiary. You must have seen that there was in a standalone balance sheet at the India level, company had made a profit, but due to the correction in the selling price in Europe, we have lost about 2 crore rupees, and that's why that impact has come from the Europe subsidy. The old stock which we had and we need to sell it a little bit lower price than what we have transferred, that has impacted. And we don't foresee that going to happen in next quarter onwards or this quarter onwards.
Okay, got it, sir. And one more follow-up was with respect to a newly launched product, what percentage of your total revenue has it contributed, and
it is insignificant at the moment.
To optimize your product mix?
Currently from Pakhajan, the new products are at a very insignificant level. Yeah.
Okay. Hello?
Yeah.
Yeah, that would be all from my side, sir.
Well, the product mix optimization can happen only from Vapi. Pakhajan is a dedicated line. We don't change the product at Pakhajan.
Okay, sir. Thank you for the details.
Thank you. Our next question is from the line of Jayesh Shah, an individual investor. Please go ahead.
Hello. Hi, am I audible?
Yes.
Yes. Hi, thank you for taking my question. So my first question would be, the establishment of the wholly owned subsidiary in the US is a notable development. So how do you intend to leverage this subsidiary to strengthen your market position and distribution network in the American market? And what are the key milestones do you aim to achieve with this new entity?
Well, the purpose of having a subsidiary to reach out to the more end users in USA, whom we are not able, we have identified in last 2 years time that there are potential, but provided we have a ready stock in USA. And we also learn from our Europe subsidiary that when we have a stock point there, we can grow much better. So the purpose is to reach out to more customers and to expand our profit margin by 3 to 5% further on that sales.
Okay, that was good. So I just also wanted another follow-up is, so considering that international sales for the company account for over 61% of your revenue, so what are your long-term objectives for expanding in these markets? Are there any particular international regions or segments you are prioritizing for growth?
Well, currently our focus is purely onto the industrial segment of the range, and that's where we want to grow. Not only in Europe, USA, we are also trying to establish ourselves in South America, the Middle East, and many other regions we trying to capture.
Okay. Another follow-up and last question from my side would be, how do you plan to tackle the pricing pressures that have led to a 300 basis point reduction in the export revenue? And are there any specific strategies in place to counteract these pressures and improve profitability in your international markets?
I don't see there's a pressure on us or there is something what we lost. For me, always my measurement is on the volume growth rather than the value what we achieve. And I think I'm quite satisfied with the volume growth what we are having and what kind of commitment we are getting into it. So there is not much, I think, kind of a thing which is putting us into the very much other earnings position. We are confident that we will bounce back to 65% plus in export sales. It's a momentary low in an export side.
Okay, thank you so much. That was it from my side. Thank you.
Thank you.
Thank you. Our next question is from the line of Sahil Vora from MNS Association. Please go ahead.
Hello, am I audible?
Yes.
Yes, sir. I wanted to ask, with the recent completion of the Pakhajan project, how do you anticipate this will affect your production capacity and operational efficiency? Given that the facility is now fully automated and requires minimal workforce, could you provide a detailed timeline for when you expect to see the full benefits of this expansion?
Well, we expect to have this full expansion by end of Q3 or by Q4. We should achieve at least 70 to 80% utilization by that time. By that time, we expect also the full customer qualification whom we are tapping up.
Okay, sir. My follow-up would be, following the completion of this project and other strategic investments, what are the capital expenditure plans for the remainder of FY25? And also, are there any additional projects or expansion on the horizon?
Well, generally companies spend on repair capex is about 5 to 10 crore rupees, not more than that for this year. And for the further capex, we have not planned anything yet. Once we achieve a 70 plus utilization from the new facility, we'll talk about that. That should happen somewhere in the last quarter or the first quarter of FY26.
Okay, sir. Got it. Sir, lastly, what are your expectations for revenue and profit growth in the upcoming quarters? As to what strategies are you implementing to achieve these targets given the current market conditions?
Well, as we said that from Pakhajan, this quarter 2 will be about 20% and then there will be ramp up. That's what we are anticipating also today. Same thing. And we are quite confident that we should be able to achieve what we have projected sales potential of about 900 crore plus in FY25.
Okay, sir. Thank you so much.
Thank you.
Thank you. Our next question is from the line of Rohan Patel from Turtle Capital. Please go ahead.
Yeah. Thanks for the follow-up opportunity. Sir, I just wanted to understand, once the Pakhajan facility is fully commissioned and operating at an optimum level in FY26, and it will start generating cash flow, so do we have any plans for reducing the borrowing? Because lately it has been above our normal level.
Sorry, I couldn't get you. I couldn't hear you properly. Can you repeat it if you don't mind?
So, to keep it short, do you have any debt repayment plans after once your Pakhajan facility starts generating cash flow?
Unfortunately, no, my dear friend. I generally don't plan repayment, but we will try to restrict this to close by FY20, end of 25, FY25, we should be close to 3. And then company has a lot of aspiration to grow. So we will not allow the debt to grow from 3 or below. We prefer to be into the zone of 2 or 2.5 times to EBITDA. That's the zone we want to be there always. And I think we will work towards that very strongly. But we are not expecting to increase any debt. Whatever we will make the money, we will like to plug it back to the company for the future expansion. As you know, that in Pakhajan there is a huge opportunity to grow for us. This is just the beginning.
Okay, so there are still opportunity to expand in Pakhajan.
Well, Pakhajan is only right now what we anticipate of the future or optimal capacity is just only 10% what we have put up today. We have so much of land available in Pakhajan, and we need to leverage that first.
Okay. And in quarter 3 FY24 presentation, there was on one of the pages, the total revenue potential of somewhat 3-4 products is around 5,500 crores. So are those products made in Pakhajan facility?
Yes.
Okay. And the revenue potential, this is for Yasho Industries, or this is a addressable market for us?
Well, that is an addressable market for Yasho Industries, the product line.
Yeah. And okay. And can you explain just broadly what would be the competitive landscape for this product?
Well, there is a competition come from Europe. There is a competition from North America, and also there is a competition from China itself. So competition is always there. We are not in the monopoly zone anymore in today's world. So, but we are in a unique place with the government support, Make in India, the people preference of an alternate supply chain, which is helping us to get into the new market. With the existing customers, so we are able to expand our the share of the business. So that's helping us.
Okay. So can we, like, from Pakhajan facility, we are expecting somewhat 500-550 crore kind of revenue on an addressable market of somewhat 5,000 crores.
So that's what we have said, that from that side, roughly, yes, that is a target for FY26.
Okay. So can we increase our market share in this product? Is there room for us to do so from 10% to say 20%?
Well, market size is very huge. We are just above a couple of $1 billion, and we are only 100 million revenue we are talking about, or less than that. So I don't see there should be any challenge for us to grow our share from 100 million to 200 million or $250 million.
Okay. Okay. Thank you. That was from my side. Thank you.
Thank you.
Thank you. Our next question is from the line of Akash Zaveri from Time and Tide Advisors. Please go ahead.
Thank you so much for the opportunity. So my question was regarding, could you throw some light on the demand environment for rubber chemicals and lubricant additives, especially lubricant additives, because, we recently read that Lubrizol is investing about $200 million in India over the next 4 years to put up their second biggest facility globally. So over a period of time, how do we see the market, growing? Would there be pricing pressure, or how will growth in the industry look like?
Well, we are seeing there is a growth happening in the market. We do see couple of people are putting up larger blending facilities in the many of our region globally, and that is giving us the confidence that yes, there will be demand, continuous demand, and industry is growing by with healthy growth of 3 to 4% year on year. So it's not question of we are snatching somebody's business, but we are also getting a small pie of the growth of the market itself.
Okay, sure, sir. Thank you so much. That's all. All the best.
Thank you.
Thank you. Our next question is from the line of Nitya from Kamakya. Please go ahead.
Yeah, hi, sir. So I noticed that the debt to equity has now touched nearly 2 times. So I just wanted to understand, to have a better margin profile and a more comfortable balance sheet, are there any plans to dilute some equity through a QIP?
No.
Okay. Thank you. That's it from my end.
Thank you. Next question is from the line of Utkarsh, an individual investor. Please go ahead.
Thank you for the opportunity. Can we expect the current interest and interest and depreciation of this quarter to be the steady state number going forward?
Yes.
Okay. Thank you.
Thank you. Our next question is from the line of Arman from Blue Sky Capital. Please go ahead.
Yeah. My first question is, if I heard it correctly, so we are targeting a revenue for FY25 as 900 crore, right?
Yes.
And what will be the overall margin? What will be our overall EBITDA margin on that?
About 19 to 20%.
Okay, including the one-off which we had in Q1, right? Because of the ramp up and which we have done. Is that so, the reason?
I think we are talking about FY25 margins. So yes, that will
Yeah, FY25 margin, yeah.
Yeah, so the Q1
18-19%, right?
Q1 margin was anticipated by us. It's something, nothing has come as a shock or news to us, because we know that the plant has been commissioning. We know that the utilization is going to be low for the first 2 quarters, but that can be offset by the Q3, Q4 utilization.
Okay. And just an understanding of the industry, I want to, like, one of the largest player in the rubber chemical industry is operating at a margin of 14%, but we have been regularly clocking margin of 17-18%. So what has been our USP to outperform even the largest player in the rubber chemical industry? Our margins have been 400 basis points more than regularly on from them.
Well, we are not into the commodity, number one. We are more into the performance and the so-called specialty chemistry within the rubber space, or also into the lubricant space. And a lot of our specialty chemicals are really specialty in that nature, and that is helping us to hold up the margin and allow us to grow.
Okay. Okay. Thanks a lot.
Thank you.
Thank you. Our next question is from the line of Manan Shah from Moneybee Investment Advisors. Please go ahead.
Yeah, hi. Thanks for the follow-up. I wanted to understand that what is pushing these new customers to, prefer Yasho over the existing competition? Is it that we are at a better price point compared to our competition, or there are other reasons, which are helping us to get into these markets?
Well, there are multiple reasons, but definitely one of the reasons could be the better pricing by Yasho offering to them. Number two, as I said earlier, that the people are looking for an alternate supply chain. So that's another major reason also. I think last couple of years, since from pandemic 2020, we have proven ourselves that we can deliver the material despite of all the challenges going on due to the geopolitical reasons. We are able to maintain.
Okay. So once these trials are done, do we expect any long-term supply contract arrangement that these customers will enter into with us, which will give us some visibility, or this will be more as and when required, they'll be giving us the orders?
No, there will be definitely a long-term supply agreement with the customers, various customers.
Okay. Understood. Sure. Thanks.
Thank you.
Thank you. Ladies and gentlemen, a reminder to all participants, you may press star and 1 to ask questions. A reminder to all participants, you may press star and 1 to ask questions. As there are no further questions from the participants, I now hand the conference over to the management for closing comments.
I would like to thank everyone for taking time out and joining on the call today. I hope we have been able to respond to your queries adequately. We look forward to your continued support as we navigate the road ahead together. If you have any queries, you may kindly reach out to our investor relationship partner, Orient Capital. Thank you so much, ladies and gentlemen, and have a good day. Thank you.
Thank you. On behalf of Yasho Industries Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.